Welcome to the weekly markets update. I'm Marit Sagarishvili, investment consultant at Kamak Retirement Group. Today we are recapping what moved the markets during the week ending on January 8th. Stock prices brushed off concerns about rising coronavirus cases and a disappointing employment report, with the major indices hitting fresh all-time highs in the first full trading week of the new year. Markets were bolstered by the prospect of further stimulus, particularly now that the Democrats have won the control of the House and the Senate. For the week, the Dow rose 1.7% and S&P 500 index was up by 1.9%. U.S. Treasury yields climbed higher, with the 10-year rising above 1% for the first time since the pandemic hampered the global economy. The 2-year to 10-year Treasury spread also widened to its steepest level since 2017, as the reflation trade gathered momentum after the results of Georgia runoff elections. Market measures of inflation expectations are also climbing, with the break-even inflation rate rising above 2% for the first time since 2018. The rally in risk assets and investors' insatiable appetite for yield in the low interest rate environment has driven average yield on U.S. junk bond index to its lowest level in history. The effective yield on the index fell to a record low of 4.36% this past week, offering very little compensation for taking on additional credit risk in a still uncertain economic environment. Oil prices briefly climbed above the crucial $50 per barrel this past week. This is the first time that oil prices were above the crucial $50 level since last February. The sharp rise in oil prices was driven by Saudi Arabia's surprise production cut at the OPEC meeting at the beginning of the year. The move lifted the share prices of energy companies. The minutes from Federal Reserve's December meeting suggested that policymakers will continue to buy treasuries and mortgages for the foreseeable future until the substantial progress have been made on the employment and inflation goals. The Institute for Supply Management reported that economic activity surged to a 2.5-year high, with the index rising to 60.7 in December. The dividing line between expansion and contraction is 50, so the recent report reflects a strong acceleration in manufacturing activity. The weekly jobless claims report dipped slightly in the final week of 2020, with 787,000 Americans filing for the new unemployment benefits. While the report was better than the market's expectations, the elevated level of filing suggests the labor market is still struggling with the ongoing pandemic. In addition, U.S. economy shredded 150,000 jobs. The surprise decline shows the impact the continued spread of coronavirus cases. The unemployment rate remained unchanged at 6.7%. Thank you for watching. For questions, please visit our website, kamakretirement.com.